week, which is widely expected to cut interest rates by 25 bips. A Reuters poll shows nearly 80% economists are eyeing a rate cut, followed by a long pause going into next year. Now, what all can we expected? Can we expect to see from the MPC meeting about the stance, about the rate cut decision? My colleague Mitali Jain is here to give us all the details.
Right, so all eyes are on the upcoming MPC meeting as the markets are actually braced up for another possible policy move by the Reserve Bank of India. And according to the Reuters poll, nearly 80% of the analysts actually expect a 25 basis point rate cut, which could bring down the repo rate to 5.25%. Also, now this expectation is strengthened as the RBI governor has given his recent remarks stating that the current economic data also suggests a room for further rate cuts. Now let's have a look at the RBI's updated projections after the Q2 FY26 GDP numbers came, and now the growth is expected at 6.8% for FY26, moderating slightly to 6.4% in Q1 FY27, while for inflation it is projected to fall down sharply to 2.6% before stabilizing at 4.5% in Q1 FY27. If you talk about the global factors, the global risk still persists and the investors seem cautious around the US tariffs, 50% of tariffs that the US has proposed, after the FIIs seem to pull out $17 billion from the Indian market so far this year. Now, looking at past trends that the RBI's rate cuts is considered, so RBI has held rates steady since August after delivering a 100 basis point cut in the first half of the year. Also, softening food prices and adjustments in the GST slabs have brought down the inflation to just 0.25%, creating a more comfortable policy environment. If you look at the current rates for the policy rates, the repo rate stands at 5.5% with CRR standing at 3.3%. Now, the interest rate trend for 2025. So rates have been gradually moving lower during the year and starting at 6.5% in January, slipping down to 6% in April and further easing down to 5.5% in June. And from there, we have seen a stable rate until September. If you see India's GDP trend, the growth has been picking up momentum from Q1 FY25. If you see, the numbers were around 6.5%, which have come up to 8.2% in Q2 FY26. So the recent numbers show a strong acceleration in growth, which may give the MPC confidence even with a rate cut. Now you're talking about the IIP trend. So industrial activity, however, presents a mixed picture with IIP slipping to just 0.4% in October, pointing to volatility in manufacturing and output. But overall picture, if you talk about, we see that the domestic inflation has been softened, growth holding is strong, and global trade risks still loom. All eyes will be now firmly on the MPC meeting, with the street strongly expecting a 25 basis point rate cut.
All right, then let's move on.